WeMasterTrade. Trade.
Okay, so welcome back, WeMasterTrade family. So picture is you are skilled traders and you've spent hours mastering charts, studying the market, sharpening your edge. But one thing's always hold you back, which is capital and risk. But what if someone believes in your talent enough to back your trades? What if you could access thousands of dollars in funding without risking your own money? So welcome to WeMasterTrade, where your skill meets a capital.
And WeMasterTrade isn't just another platform in the grounded space with something different, something bold, and what we call an angel funding project. Why angel? Because we don't just fund traders, we invest in them, we guide them, and we help them scale the potential into real, consistent profits. Think of us as your trading partner, the silent force behind your jobs, your trades, and your growth.
And the best part, we take the risk so you can focus on what you do best, trading smart. No pressures of losing your own capital, no more emotional trading due to fear of personal loss. With WeMasterTrade, you are finally free to trade with clarity, control, and confidence. And guess what? You still get to keep up to 90% of the profits. Sounds like a dream? It's not, it's our model.
So our mission is very simple but powerful: to empower serious skilled traders with capital, tools, and community so they can thrive in the global market. And we are not building just a platform, we are building a platform that recognizes you, the trader, happy with investing in.
And it doesn't matter where you come from, your background, your budget, your story. If you got the discipline, strategy, and the mindset to grow, you got the capital to fuel your journey.
So if you're ready to stop trading small and start to get big, welcome to WeMasterTrade, where your talent meets our trust. Let's make trading your full-time future.
So before we dive deeper into how things work, let's take a moment to introduce ourselves. So behind the every great form, there's a great teams of real traders, real people, and real passion.
So hi everyone, I'm Scar, a full-time trader, former analyst, and now I'm a mentor here at WeMasterTrade. I've been in the markets for over 2 years, and I've seen it all. The wins, the losses, the like night job sessions. What I love most while helping traders finally break through that feeling, the one where capital always feels like the enemy. At WeMasterTrade, I get to flip that narrative. We become the win at your back.
And I'm Ralph, swing trader, risk management guide, and honestly, your go-to high man when the market gets rough. I started just like many of you, demo accounts, blowing small accounts, learning the hard way, but eventually I found consistency and the trust is it came down to two things: discipline and backing. Now I'm here to work with WeMasterTrade and support traders like you to reach that level faster without going broke in the process.
And I'm saying, but more than that, I'm your connector, here to guide you through the WeMasterTrade ecosystem. So I may not be the one who owns charts all day, but I've spent years building brands, platforms, and communities that empower creators and traders decide. So trust me when I say that you're about to discover what WeMasterTrade could change the way you trade forever. And now you've met our team, let's explore how WeMasterTrade empowers traders like you to reach new highs. Our process is designed to be straightforward, supportive, and most importantly, aligned with your success.
At WeMasterTrade, we understand that every trader's journey is unique. That's why we offer two distinct funding pathways to cater to different experience levels and goals. First, we have challenge package, which is ideal for those who prefer a structured evaluation to showcase their trading skills. And we also have instant funding package, which is perfect for experienced traders seeking immediate access to capital without undergoing a challenge phase. So let's dive deeper into each option.
Let's start with the challenge package. This pathway is tailored for traders who want to demonstrate their proficiency through a structured evaluation. So here's how it works. The Phase 1 trading skill assessment aims to achieve an 8% profit target while adhering to our risk management guideline. This phase evaluates your ability to generate profits and manage risk effectively in a simulated environment. And in Phase 2, stability assessment, strive for a 6% profit target, focusing on profit consistency and disciplined trading practices. Successful completion of this phase showcases your readiness to manage a funding account responsibly. Even passing both phases, you will be granted access to our capital, allowing you to trade with real funds and share in the profits.
And for those seeking a more direct route, our instant funding package offers immediate access to trading capital. This option is designed for traders who have a proven track record and wish to bypass the evaluations process. Key features include immediate access to capital, starting trading with amounts ranging from $10,000 to $200,000. And we also have profit sharing, so you can enjoy a profit split of up to 90%, rewarding your trading expertise. And we also have flexibility. There is no restrictions on trading styles, allowing you to utilize strategies such as scalping, day trading, or using expert advisor. And this package empowers you to leverage your skills and experience without delay.
And regardless of your path you choose, our commitment remains the same to provide you with the resources, support, and opportunities needed to excel in the trading world. But how do we ensure a seamless and efficient trading experience? So let's talk about our cutting-edge platforms.
At WeMasterTrade, we prioritize providing you with top-tier trading platforms that cater to both novice and experienced traders. Our offerings include all-in-one platform, a user-friendly web-based system that allows you to manage accounts, place trades, and monitor performance seamlessly, integrated educational resources to enhance your trading knowledge as you go, and the second one, advanced trading platform, which is Platform MD5, designed for active and professional traders seeking advanced tools and customization. Features include multiple trading tools, indicators, and enhanced control over orders, available for download on Windows, Mac OS, Android, and iOS devices, and ensuring you can trade on the go. These platforms are engineered to provide a robust and flexible trading environment, enabling you to execute your strategy effectively.
And beyond technology, we believe in the power of community and continuous learning. As part of the WeMasterTrade family, you have access to educational courses, which is comprehensive programs covering various aspects of trading suitable for all experience levels. We also have mentorship programs with guidance from seasoned traders to help refine your strategies and decision-making processes. And we also have community engagement. This is opportunities to connect with fellow traders, share insights, and grow together. Our goal is to foster an environment where you can thrive and achieve consistent success.
trend patterns and trust are the cornerstones of our operation. WeMasterTrade is a fully registered company holding an official NO3 license in the United States and complying with the international security regulations. So our credibility is further enhanced by multiple industry awards recognizing us as a leader in the prop trading space. But don't just take our word for it. So let's hear from some of our traders who experience success with WeMasterTrade.
Absolutely, our traders' success stories speak volumes about the opportunity and support we provide. For instance, many have praised our instant funding process, highlighting how it has enabled them to trade larger positions without risking personal capital. Others have emphasized our transparent profit-sharing model and flexibility to employ various trading strategies without restriction. These testimonials underscore our dedication to empowering traders and fostering a community of trust and mutual growth.
So, in summary, WeMasterTrade offers a comprehensive ecosystem designed to support traders at every stage of their journey. Whether you're looking to improve your skills through our challenge package or seeking immediate capital via our instant funding package, we provide tools, platforms, and community to help you succeed. So, ready to evaluate your trading career? Join us at WeMasterTrade, where your talent meets our trust, and let's embark on a journey together and achieve new highs in the trading world. Okay, so now that we have covered, what WeMasterTrade operates, and let's dive in, standard features here that make platform the go-to choice for traders worldwide. So Scarlett, what are you kicks it off?
Absolutely, one of the most compelling aspects of WeMasterTrade is our instant funding option. Unlike traditional platforms that require lengthy evaluations, we provide traders with immediate access to capital. This means you can start trading with virtual funds ranging from $10,000 up to $200,000 with buying power up to $1 million right away.
And let's not forget about our profit-sharing models. At WeMasterTrade, we believe in rewarding our traders generously. You can earn a profit share starting at 50% of your first payout, increasing to 75% on your second, and reaching up to 90% from your third payout onwards. This structure ensures that as you continue to succeed, you reap more of the reward.
So that is impressive. So can you tell us about the diverse range of tradable instruments available on our platform?
Certainly, WeMasterTrade offers a wide array of financial instruments to cater to various trading preferences. Our traders have access to forex pairs, which include major, minor, and exotic currency pairs. Also, energies, which include commodities like crude oil and natural gas, indices, major global indices representing different markets, and we also have stocks, shares from leading companies across various sectors. This diversity allows traders to explore multiple markets and diversify their trading strategies.
Speaking of strategies, our platform is designed to accommodate various trading styles. Whether you are into scalping, day trading, or using expert advisors or EAs in short, we've got your cover. Plus, we allow news trading and offer unlimited contract sizes, providing the flexibility you need to implement your preferred strategies effectively.
So flexibility is key in trading. So Scarlett, can you elaborate on the educational resources we offer to support our traders?
Of course, at WeMasterTrade, we understand that continuous learning is vital for trading success. That's why we established the WeMasterTrade Academy, offering comprehensive educational resources, including trading courses where covering fundamental and technical analysis, risk management, and trading psychology. We also have platform tutorials which help traders master the use of our advanced trading platform. And we have webinars and seminars featuring industry experts sharing insights and strategies. So our academy is designed to empower traders with the knowledge and skill needed to excel in the markets.
And let's not overlook our daily payout features. WeMasterTrade ensures that traders can request profit withdrawal daily with an average payout time of just 48 hours. This means you won't have to wait long to enjoy the fruits of your trading effort.
So, quick overview of how to indeed a game changer. So, could you shed some light on this and that we currently offering?
Certainly, our scalp plan is designed to reward consistent performance as you demonstrate steady profitability and adherence to risk management rules. We offer the opportunity to increase your account size. This means access to larger capital allocations, allowing you to scale your trading operations and potential profits over time.
And to support your trading journey, we provide a user-friendly trading platform equipped with real-time data and advanced tools. This ensures you have a seamless and efficient trading experience, whether you are a novice or an experienced trader.
To sum it up, WeMasterTrade combines instant funding generous with profit sharing, a diverse range of tradable instruments, flexible trading conditions, comprehensive educational resources, payouts and opportunities for growth. So it's a platform designed by traders for traders aimed to provide everything you need to succeed in the financial market.
Exactly. Whether you just started out or looking to take your trading to the next level, WeMasterTrade is here to support your journey every step of the way.
So traders, this is where magic is going to happen because we'll talk about the packages and how you can jumpstart your journey with WeMasterTrade. But let's be honest, it isn't just about the package that you choose. And stick into the rules. So the conditions that we've set here, WeMasterTrade, are designed to not only keep you safe but also help you grow and take your strategy to next level. So now we're just getting started of years of experience. These conditions will act as your roadmap. Just dive into the rules that define our trading environment, because if you understand the rules, you can master the game. So first on the list, and arguably one of the most important, is the daily loss limit. So Clive, I believe you've been through it all, the high, the low. So can you kick things up by explaining for everybody how the daily loss limit works and why is it crucial for managing risk?
Absolutely, Aidan. The daily loss limit is one of the most essential protections any trader can employ. It serves as a daily circuit breaker to prevent you from suffering significant losses on a challenging day. There is a limit to how much you can lose in a single day of trading, and is determined by the greater true values, your account balance or your equity at the beginning of the day. So let me break that down with an example so everyone understands it clearly. For the first example, let's say you got a balance of $105,000, but due to some open trades, your equity including 14 profits and loss is $107,000 at the start of the day. If you are working with a 4% daily loss limit, that means you can lose up to $4,000. If your equity falls below $103,000, you are done trading for the day. And for on the flip side, your balance is $100,000 and your equity is $99,000. The same 4% loss limit, which means your account would be liquidated if your equity dips below $96,000. The point is the daily loss limit is there to make sure party doesn't wipe you out completely. It's about protecting your account and giving you the chance to regroup and come back stronger the next day.
Got it. So it's like an insurance policy for your trading day. You hit that limit and boom, you before things get out of hand. But what happens if a trader accidentally crosses that line? Can they keep trading?
Great question. I don't know if you breach the daily loss limit, your account is automatically liquidated, or your open positions will be closed and you won't be able to trade again, or unless you buy a new trading package. So here's the thing, this liquidation is automatic and immediate. It's designed that way to prevent further losses, but here a word of caution. Market fluctuations can sometimes cause you to lose a bit more than the limit, depending how fast the market is moving.
So it's a hostile, definitely something traders should keep an eye on to avoid. And now that we understand what the daily loss limit is and what happens when it hits, so the next question is how to avoid hitting a limit in the first place. So Scholar, I believe you've been in a trading trenches for years. So can you share some practical strategies that traders can use to stay within the daily loss limit where all is?
Of course, I don't. So staying within the daily loss limit is all about being disciplined and following a solid risk management plan. Here are a few key strategies that have worked wonderful for me and countless other traders. First, and I can stress this enough, always use stop loss. I know it sounds simple, but it's absolutely critical. The stop loss ensures that if the market moves against you, you're out of the trade before things get out of hand. Think of it as your safety net.
So it's like setting up guardrails and man road, right? It's there to stop you before you go off the cliff.
Exactly, it's the extra layer of protection. Now the second strategy is position sizing. This is where a lot of traders slip up. You should never risk too much on a single trade. A good rule of thumb is to risk no more than 1 to 2% of your account balance per trade. This way, even if the trade doesn't go your way, you still fall from hitting your daily loss limit and you can keep trading without any major setbacks.
So it's like building a defense. You don't put everything in one play, right? You spread out the risks, and that actually makes sense. But what about those moments when traders feel tempted to chase after the losses? Trying to get all back in one trade?
Oh, that's a big one. And then chasing losses is one of the biggest mistakes traders make, especially new ones. This brings me to my third strategy. Don't chase losses. If you're having a tough day, take a step back. The market will always be there tomorrow. But if you start chasing losses, trying to recover too quickly, it's easy to make emotional decisions that lead to even bigger losses. And before you know it, you hit that daily loss limit and you're out for the day.
So true, it's like trying to sprint when you're rarely rented, you're more likely to make a mistake. Now, Scarlett, these strategies sound spot on, but how do traders stay mentally strong when things aren't going their way? And what keeps them from falling into the emotional trap of chasing losses?
Well, it's all about a mindset. Dividend trading is just as much a mental game as it is a number game. You got to stay calm and focused. One trick is to always have a trading plan before you even place a trade. That way, when things get tough, you stick to the plan and avoid making impulsive moves. And if you find yourself getting emotional, just stop, take a break, step away from the screen and reset your mindset.
Thank you, Scarlett, for those incredible tips on managing daily loss. And now let's shift our focus to another critical element of risk management, the maximum loss limit. So this limit is like your long-term safety net, ensuring that you don't deplete your account over time. So unlike the daily loss limit, which resets at the end of each day, the maximum loss limit is cumulative. So when you reach it, your account will be locked and your trade will be closed. So to dive deeper into this, let's discuss how the maximum loss limit works, how is it calculated, and why it's essential for every trader at every level. So whether you're a new trader looking to minimize risk or an experienced trader scaling your strategy, this limit ensures that you don't go beyond a point of no return. So Scott, I know you've got some great insights into the mechanics of the maximum loss limit. So can you walk us through how this really works and what strategy you need to keep in mind as a plan for trading strategies?
Of course, the maximum loss limit is a vital rule that often overlooked but extremely important. Essentially, it's there to prevent traders from experiencing catastrophic losses by capping how much you can lose across the life of your trading account. So let's break it down. The maximum loss limit ensures your account equity never falls below 94% of its initial balance. So if you start with a balance of $50,000, your account will be closed once your equity falls to $47,000. That's a total allowable loss of $3,000. However, it's not all bad news. If you start making profits, the limit adapts, giving you more breathing room as your equity grows. For example, if your account balance increases to $2,000, you now make $2,000 in profit. Your new maximum loss limit would then allow you to lose up to $5,000 as you're essentially locking in those gains. The maximum loss limit acts as a long-term safeguard. It's designed not only to protect your account but also encourage disciplined trading by setting boundaries. The goal is to ensure you don't dip yourself into a hole that's too deep to recover from. So here are a few specific examples. With the case number 1, let's say your account balance starts at $50,000 but your equity drops to $49,000 due to some market losses. You are allowed to lose another $2,000 before your account hits that critical $47,000 threshold and is automatically closed. In the case number 2, now if you're doing well and your equity rises to $51,000, you got some extra cushions. At this point, you're allowed to lose up to $4,000 before your account hits that same $47,000 limit. So to figure out when you stand, the maximum loss limit is calculated by adding the sum of your closed position and factoring any open position as still running. Your trading dashboard will show two metrics. First is the max permitted loss. This is show how much you are allowed to lose overall, and the remaining loss, the loss left before your account is closed. Now, what happens if you hit that limit? Well, unfortunately, if your equity hits that maximum loss limit, the system will automatically close your account for the day. All your positions will be liquidated, whether you're profitable or not, and you'll be unable to trade for the rest of the day. So to resume trading, you would need to purchase a new trading package.
Thanks, Scholar. That definitely helps clarify the nuts and bolts of the maximum loss limit. So it's a very good safety buffer, isn't it? It's to keep you from spiraling out of control, especially when the markets get volatile. Now, I imagine these rules impact different traders in different ways. So whether you are a cautious trader who keeps their risk low or a more aggressive trader trying to maximize profit, so this is one of those things you can't afford to ignore. So next up, we are going to bring in Scarlett, our risk management expert. So Scarlett, what do you think are the most common mistakes traders make when it comes to managing their maximum loss limit? And more importantly, what strategy trader can implement to ensure they never get too close to it?
Great question, Aidan. You're absolutely right. No matter what type of trader you are, ignoring the maximum loss limit can be costly. In fact, it's one of those things that can sneak up on traders who aren't paying attention to the long-term picture. And I say the most common mistake is underestimating how quickly cumulative losses can add up over multiple trades. Here are some key strategies which I recommend to stay well within your maximum loss limit. Well, you need to set stop loss order on every trade. This is the first line of defense. Setting a stop loss means you're deciding in advance how much you're willing to lose on a particular trade. The system will automatically close your trade if it hits that number, which protects you from letting a losing trade get out of hand. For example, if you're only willing to lose $500 on a particular trade, you set that as your stop loss and you won't have to worry about it spiraling.
I love how they put in a safety belt on each trade when you look in that stop loss is out of your hands.
Exactly, Aiden. It's all about discipline. The next one is manage your position sizing. This is a big one. Often traders, especially new ones, get carried away by putting too much capital into a single trade. But when you risk too much, you also risk losing a larger percentage of your account if the trade goes south. A good rule of thumb is to risk no more than 1 to 2% of your total account balance on any single trade. For example, if your account balance is $50,000, you should only risk around $500 to $1,000 per trade. This keeps your potential losses manageable and well within your limit.
Oh, so that makes total sense. So you're not putting all your eggs in one basket, and it gives you more room to breathe, right?
Exactly, it's all about spreading the risk so you don't take too big of a hit on any one trade. The next one is monitor your account equity regularly. This might sound basic, but it's incredibly important to keep an eye on your account equity throughout the day. It's easy to get caught up in the market's highs and lows, but you should always be aware of how close you are to your maximum loss limit. Your dashboard makes it easy to check your remaining loss, so use it. If you see that you're getting close to the limit, it's time to take a step back and re-evaluate your strategy.
So it's almost like watching a field gauge. You don't want to be driving on things without knowing it.
That's right, and no one wants to get stuck on the side of the road. And the next one is to create and stick to a trading plan. Having a well thought out trading plan is one of the most powerful tools in the trader's arsenal. This plan should outline not only your profit goals, but also your risk management rules. For example, if you have a few losing trades in a row, does your plan tell you to take a break, reassess, or change your strategies? The idea is to have a preset series of rules so you don't make impulsive decisions in the heat of the moment.
Oh, it's like having a roadmap, right? You know where you're going and you have the contingency plans for when things don't go as expected.
Exactly, the market can be unpredictable, but a solid plan keeps you grounded. Next is to regularly review and adjust your strategies. Even the best laid plan needs to be reviewed and tweaked from time to time. If you find that you're approaching your maximum loss limit too often, it may be a sign that your risk management strategy needs adjusting. Maybe you need to tighten your stop loss or reduce your trade sizes. The key is to stay flexible and adapt to changing market conditions while always keeping your risk in check.
So that's a great advice, Rab. So I believe that is all about constant improvement. You can't just set and forget that you ought to be ready to adjust based on the risks and the market.
Absolutely, trading is dynamic and your strategy should be too.
Okay, so thank you for the fantastic breakdown of the maximum loss limit, Scarlett and Rab. So next up we are going to enter a short break, and then after that we're going to continue exploring our profit consistency rule and risk consistency rule. Thank you.
Trade. We copy trade. Copy trade. Copy trade. Trade.
Welcome back, WeMasterTrade family. So next up we are going to enter a really important topic, the profit consistency rule. So this rule is critical for ensuring long-term sustainable success in trading, as it helps measures and maintain consistency in your profit. So now to give us a clear picture of how the profit consistency works and why it's important. So let's turn to Scarlett. So Scarlett, can you break down the rule for us and how it is calculated and why is it important for traders to focus on their consistency rather than just aiming for big ones?
Of course, Agent, the profit consistency rule is a powerful metric that helps you understand how stable your profits are over time. It's not just about making big gains on 1 or 2 good days, it's about being consistent day in and day out. So here's how the profit consistency rule is calculated. You take your highest single day profit and divide it by the total of all your profits and losses over a given period, usually a month or a quarter. Then you express that result as a percentage. So let's go through an example. Say your best day brought in $200 in profit, but over the month, your total profits and losses add up to $410. In that case, your profit consistency ratio would be about 48.7%. This ratio shows how much your performance comes from one standout day. Ideally, you want this percentage to be lower, under 20%, because that means your profits are more evenly spread out across all your trading days. Now, why is this important? A low profit consistency ratio indicates you're not just relying on a couple of big wins to stay profitable. Instead, you're showing that your strategy works consistently over time, even on those days when the market isn't giving you big wins. That this kind of consistency is the hallmark of a successful long-term trader.
So just to clarify, a low ratio means that you're more likely to make steady gain rather than being overly dependent on a few good days, right?
Exactly. And then when you're too reliant on just a few big wins, it often means your strategy is risky or inconsistent. You could go through long stretches when you're not making much money or even losing it. But if your profit consistency ratio is low, it shows that your performance is smoother in your trading. It's more predictable and stable over time.
So that's incredibly insightful, and it seems like a critical metric for any traders who are serious about long-term success, right?
Exactly, consistency is the key to sustainable profitability. Big wins are great, but if they are followed by big losses or long periods of break-even trading, it's hard to maintain momentum. With the profit consistency rule, traders can keep an eye on how reliable their strategy is over time.
Okay, so now that we've got a solid understanding of what the profit consistency rule is, so let's dig in some practical strategy to help traders maintain a low ratio, ideally under 20%. So Ralph, I know you've got some great tips for it, so can you walk us through some techniques that traders can use to stay consistent and ensure that their ratio stays in check?
Absolutely, Aiden. The profit consistency ratio is a powerful indicator, but it takes careful management to keep it low. So let's talk about some practical ways traders can improve their consistency and avoid becoming too dependent on those rare big wins. One of the most effective strategies to keep your profit consistency ratio low is to diversify the trades. This means spreading your investment across different markets, asset classes, or even trading strategies. If you only trade one market, say forex or stock, you risk being too reliant on that market's performance. By diversifying, you reduce the impact of any single loss and create more stability in your overall performance.
So that makes a lot of sense. So if I'm only trading in, let's say, the US stock market, I bet we could really hit my profit consistency, huh? But by adding trades in, for example, commodities or forex, I could balance some of that risk, right?
Exactly, Aiden. It's all about balance. When one market isn't performing well, another market might be doing better. This way, your overall performance stays smoother and you are not relying on just one or two trades to pull you through. Next up is position sizing. One of the biggest mistakes traders make is over-leveraging, taking on positions that are too large relative to their account balance. For example, if you have a $10,000 account, putting $5,000 into a single trade is risky because if that trade goes south, you could lose a significant portion of your capital. Instead, aim to keep your position sizes small and manageable. Say no more than 1 to 2% of your account balance per trade. This reduces your risk and helps ensure that losses don't overwhelm your profits.
Right, so it's not just about picking the right trades, but also making sure you're not putting too much of your capital at risk on any single trade. So smaller, more controlled trades lead to steadier results over time, right?
Exactly. By managing position sizing, you prevent any single trade from having too much impact on your overall performance. It's all about control and discipline. Another crucial element is having a well-defined trading plan. Without a plan, it's easy to get caught up in an emotion of trading, whether that's the excitement of a potential win or the panic of a certain loss. A solid plan outlines exactly when you will enter a trade, when you will exit, and how much risk you willing to take. Having these rules in place keeps your profit and help ensure that your trading decisions are consistent, which in turn help keep your profit consistency ratio in check.
So that's a really good point. A lot of traders, especially new ones, probably jump into trades without a solid plan and end up making an emotional decision, right?
Absolutely, Aiden. It's so easy to get emotional in the heat of the moment, but if you have a plan, it's much easier to stay disciplined and avoid impulsive trades that could hurt your performance. This brings us to stop loss order. A stop loss is an automatic exit that you set up to close a trade if it moves against you. This helps to cap your losses on any single trade and protect your account balance. By using stop loss order, you can avoid these catastrophic losses and that can throw up your profit consistency.
So I like the ideas of using stop loss orders. It's like a way to take the emotions out of the decision-making process.
Exactly, it's like setting out a safety net. Once your stop loss is in place, you don't have to worry about watching the trade 24/7. If things go south, the stop loss takes you out of the trade automatically, helping you stick to your plan and avoid large unexpected losses. Well, another important strategy is to regularly review your performance. Just because you set up a solid plan and strategies doesn't mean you should put everything on autopilot. It's crucial to track your trades, see what's working and make adjustments as needed. You might find that certain markets or strategies are delivering more consistent results than others. By keeping a close eye on your performance, you can tweak your approach and improve your consistency over time.
So it's like performing maintenance on your trading strategies, always looking for ways to optimize and improve.
That's right, just like a car needs regular tune-up, your trading plans does too. Continuous improvement is key to keeping your profits steady. Finally, and this is the big one, avoid emotional trading. Whether it's fear after a loss or overconfidence after a win, emotions can lead to poor decision making. If you stick to your strategies and avoid chasing losses or getting overly excited after a good day, you see much more consistent results.
So that's such an important point, setting calm and discipline even when the market is going crazy. But it's easier said than done though, right?
It's definitely take practice, but staying level-headed is crucial for long-term success. If you can control your emotion and stick to your plan, you'll be far more likely to maintain consistent profits.
So, thank you, Rob. Next up, we are going to dive into another crucial aspect of effective trading, the risk consistency rules. So this rule is key to maintaining both stability and long-term profitability in your trading account. So, I know you put a great way of explaining it. So, can you walk us through what the risk consistency rule is and why it's so important for traders to follow?
Sure thing, Adam. The risk consistency rule is all about ensuring that you manage your risk in a disciplined, consistent manner. It limits the risk per trade to no more than 2% of your initial account balance. This is really important because it prevents large swings in your equity and helps mitigate the risk of significant losses due to sudden market movements or unexpected events. So let's break it down a little more. With the maximum risk per trade idea, you shouldn't risk more than 2% of your initial balance on any single trade idea. This includes any floating losses, so you need to factor in all potential exposure. About the trade idea definition, multiple trades on the same asset in the same direction are considered a single trade idea. On the other hand, trades on different assets or in opposite direction are treated as separate ideas. For example, if you open several positions on gold buy, they will count as one trade idea and the combined risk must remain under 2%. But if you have a gold buy and TP1 sell, they treat it as two separate ideas, so each with their own 2% risk limit. Following these rules smooth out your equity curves, encourages disciplined trading, and most importantly, reduce the chances of massive losses.
So, thanks, Scholar. That's definitely a really helpful overview. Now let me throw this back to the audience for a second. So, curious, have any of you ever found it tricky to stick to the risk consistency rule? And how does it feel to have those risk limits in place, and does it ever get in the way of your trading strategy?
Absolutely, and the main points to remember about the risk consistency rule are risk per trade idea. Stick to risking no more than 2% of your initial account balance on any single trade idea. This keeps potential losses manageable and ensures you don't risk too much on any one trade. And a single trade idea, if you're opening multiple trades on the same asset and in the same direction, they count as one trade idea. So your combined risk must stay within that 2%. And the separate trade ideas, which is the trades on different assets or in different directions, are considered separate ideas, and each of these can have its own 2% risk, but be mindful to keep track of them. So why does this matter? Well, it stabilizes your equity curves by preventing huge swings in your account balance, and it also promotes discipline by encouraging traders to think more carefully about their risks. And the most importantly, it reduces the risk of major losses that can really hurt your overall performance. So in short, adhering to this rule keeps your trading account safer and support long-term success.
So, great, Scholar. Now I know some of you might be wondering how to make sure you actually stick to this rule. So let's shift gears and get into some practical strategies for making it easier to follow. But could you share a few tips on how traders can stay disciplined and avoid breaking the risk consistency rule?
Of course, Aiden, sticking to the risk consistency rule takes some planning and discipline, but it's totally doable with the right strategies in place. Here are a few key tips. First and foremost, clearly set your maximum risk per trade idea to stay within the 2% risk. You can use risk management tools or calculators to help with this. Most platforms have built-in tools that allow you to automate risk limits.
So that's a really good point. Having the automation takes a lot of the pressure off, right? No need to constantly double check. Your platform does the heavy lifting.
Exactly, it makes it so much easier to stick to your risk limits when the platform is handling the number for you. It's also important to keep track of the total risk across multiple trades on the same asset. For instance, if you open several positions on gold mine, make sure the combined risk for all those trades doesn't exceed 2%. This is where traders sometimes slip up. They own multiple positions without realizing that combined they are risking more than they intended.
So even though the trades are technically separate if they're on the same asset pool, to look at them as one entity, right?
Exactly, I then treat them as one idea because they are exposed to the same market movement. Speaking of different trades, it's equally important to treat trades on different assets or opposite directions as separate ideas. This way you can manage each trade stretch individually without exceeding the 2% rule on any single trade.
Right, so you could be gunning up rogue buying and a GPY sells at the same time without violating the rule, as long as you manage the risk for each one separately.
Exactly, just make sure you are keeping an eye on the risk for each idea individually. I also recommend using risk management features that many trading platforms offers, like automatic position sizing or stop loss orders. These tools can help control your exposure and prevent you from overextending your risk.
So, I imagine these tools really help prevent tempted to take on too much risk in the heat of the moment, right?
Of course, it takes the emotion out of the equations and helps you stay disciplined. Lastly, make it a habit to regularly review your trading activity. This is something a lot of traders neglect. Reviewing your trades helps ensure that your risk per trade remains within the set limits. And if you notice any patterns or areas where you are taking on too much risk, you can adjust your strategy to stay compliant.
So it sounds like regular check-ins are crucial to spotting potential issues before they become bigger problems.
Exactly, Aiden. It's all about staying proactive.
So great tips, Rob. And now I'd like to move on to... Okay, so I think that's actually covered it, and let's make sure that we are applying these risk management strategies and taking advantage of the new options available for account management. Thank you, Scarlett and Rob, for your insight. So, at WeMasterTrade, our vision is to foster a thriving community of elite professional traders, positioning WeMasterTrade.com as a go-to platform for anyone serious about advancing their career. So, we're just getting started with years of experience under your belts. We are committed to providing new opportunities and resources that help you succeed at every stage of your journey. So if you want to, take your trading to the next level, you'll definitely want to stick around to hear about the exciting offers we've got lined up. For traders who are looking for ways to have more profit, today we have an exciting update that will help you increase your earnings without changing your trading style. It's all about boosting your profit split by simply choosing the right funding package, and that will break it down for you.
Well, this new update is something that every trader should know about. When you put in the effort to grow your account, wouldn't it be amazing to actually keep more of what you earn? Well, now with this new profit sharing boost, that's exactly what's happening.
Absolutely, Ralph. I know that one of the most common frustrations in trading is feeling like your hard work isn't rewarded enough. But now, with this bonus profit sharing feature, you can actually increase the percentage of profits you can keep. It's a total game changer.
So let's get straight into the details. Here you can boost your profit split and earn more. So when you invest in an instant funding package over $175, you get 1% plus in profit sharing, and over $350 you get more than 3% bonus in profit sharing, and over $500 you get 5% bonus in profit sharing. So Ralph, can you help break this down in a brief example?
Of course, let's take a look at the $500 funding package. Normally, with instant funding, you start with a 50% profit share, meaning that for every $1,000 in profit you make, you would get $500. But with this new promotion, when you choose a package over $500, your profit share jumps from 50% to 55%. That means instead of taking home $500 from that $1,000 profit, you now keep $550, and while that might seem like a small change at first, think about how much that adds up over time, especially for consistent traders. So in short, the bigger the package, the bigger your profit share boost.
Exactly, Rap. And traders, here's why this is such a smart move. Let's say you're someone who trades consistently and makes $5,000 in profits over time. With a standard 50% profit share, you'll walk away with $2,500. but with a 55% push, you now keep $2,750. That's an extra $250 in your pocket for simply choosing the right package. And the best part, there's no extra effort required. You won't have to change your strategy or take unnecessary risk. All you need to do is select a higher funding package, and you'll instantly start earning more from the same trades.
So you might be wondering, why is this such a big deal for traders? So let's hear on back from this.
Great question, Simon. As traders, our goal is always to maximize return while minimizing risks. The best way to grow your account is to keep reinvesting your profits. But that's only possible if you're getting a bigger share of what you earn. With a higher profit share, you can scale faster, compound your earning, and have more capital to work with for your next trades. Think about it. If you are keeping a larger percentage of your profit, you have more flexibility to diversify your trades, try new strategies, and even withdraw more funds. This is especially important for those who want to trade for the long term. Over time, this small percentage increases and add up to thousands of extra dollars. So if you are someone who takes trading seriously, this is a huge opportunity to level up your earning.
And that's such an important point, Rap. And from a psychological perspective, knowing that you're earning more per trade can actually help you stay disciplined and focused instead of overtrading or take unnecessary risk to hit bigger profits. You can trade smarter because you're already keeping a bigger share of what you make. Plus, this isn't just about individual benefits. The more traders take advantage of this offer, the stronger our trading community becomes. Our capital means better trading conditions, more opportunities, and a stronger ecosystem for everyone.
So, alright traders, you've heard it from the expert. This product treasure sharing is your chance to increase your earning without changing your trading style. All you need to do is to choose the right funding package and you'll instantly boost your profit split. So visit WeMasterTrade.com now and grab your instant funding package.
Guys, this is an opportunity you don't want to miss. The market is all about making smart decisions, and this is one of the easiest ways to maximize your returns. If you're serious about your trading journey, this is a no-brainer. Don't wait too long because opportunities like this don't come out everywhere, every day.
Alright, so traders, so next up we are going to talk about one of the hottest offers available right now, the WeMasterTrade BOGO event. So this isn't just a discount or a little pack, it's a game changer for traders looking to scale their accounts with zero extra cost. So Scarlett, care to break it down for us?
Absolutely. The BOGO event, or buy one get one, is one of our most generous promotions to date. Here's how it works. If you buy an account which is $175 account or higher, you will get a free $10,000 instant account. If you buy it $340 account or higher, you will get a free $25,000 instant account. And if you buy $650 account or higher, you will get a free $50,000 instant account. So essentially, when you purchase an eligible instant funding package, you're doubling your trading assets without spending an extra cent.
And let's be real, that second account can do so much for you. Maybe you want to try different strategies. Maybe you want to split your trades between conservative and aggressive setups, or maybe you just want a safety net in case one of your accounts is stalled out. Either way, you now have more capital, more flexibility, and more opportunity.
So I love that, and this isn't a promo that makes you jump through hoops, right? The BOGO account is going to be issued after a qualifying purchase, is that right, Scarlett?
That's right. Once your purchase is confirmed, our system automatically issues your bonus account. No hidden steps, no waiting periods. A quick, seamless, and incredibly user-friendly.
And here's the cool part. WeMasterTrade allows you to combine BOGO accounts up to $200,000 in total funded capital. That means if you are a serious trader looking to scale, you can stack this account to trade even larger.
I bet too, but let's talk terms. These are, rules to keep things fair and balanced, right?
Right, so here's what you need to know. First of all, each broker account allows one payout. After you claim your first profit, that account is complete. Only one active broker promotion per trader at a time. Once you complete your broker phase, you are eligible for a new one. And lastly, broker accounts must adhere to the same trading rules as standard instant funding accounts. That means they lost maximum loss limit and profit targets still apply.
So how do you make the most of this? Well, you could use your main account for your try and true strategy and the broker account to experiment with something new. Try course giving, news breakout trading, or running an EA on one and manual trading on the other. You got options, and that's what this promotion is all about.
You can also use it to compare your emotional trading on one account with a model-based approach on the other. This creates a controlled environment for skill development. This is ideal for traders who are looking to become more consistent and test risk model under real-time funded conditions.
So to recap, with the broker event, you get an additional funding account for free instantly with the potential to scale all the way to $200,000. So you're going to diversify, test, trade smarter, and profit more. Or why WeMasterTrade cover the risk.
And if you're just starting out, it's the perfect way to get true chances to succeed instead of one. You get to refine your discipline, test consistency, and understand the platform better, with twice the experience and zero additional cost.
Exactly, we designed the broker promo with growth in mind, not just profits but development. It's a tool for building skills, scaling accounts, and increasing opportunity for every kind of trader.
So, and remember, the broker event is only available for a limited time, so don't miss the window to multiply your opportunities. Whether you're trading full-time or you're still learning the ropes, this is the offer that lets you move forward with confidence. So next up, we are going to enter the economic analysis of today's calendar.
And now is the calendar for today's. The first one, the New Zealand dollar trade balance. Trade balance measures the difference between countries' export and import. A positive number, surplus, means more goods are exported than imported, contributing positively to GDP. The actual figures blew past expectations. New Zealand had a trade surplus of 970 million compared to a forecast of just 80 million. This signals a significant increase in export demand or a sharp decrease in import. Compared to the previous figure, this marks a continued and strong upward trend in the trade surplus. For the market impact, New Zealand dollar likely appreciated against other currencies, especially in the surplus and driven by commodity export like dairy, meat, or timber. Stock market reaction may be positive if the trade surplus reflects strong global demand for New Zealand products, and for bond markets may interpret this as a reason for the RBNZ Reserve Bank of New Zealand to consider tighter policy. Under inflation and employment would also play a key role. For the stakeholder relevance, traders look for policy setup on New Zealand dollar pairs. Investor positive trade data strengthening long-term economic outlook may boost confidence in New Zealand equities, and for economists may revise growth forecasts and adjust current account projections upward. For the BOJ, the next event is the BOJ's core CPI, which is the Bank of Japan referred inflation gauge. The core CPI Consumer Price Index excludes food and energy prices, giving a clearer picture of underlying inflation. Inflation is unchanged from last month and came in below expectations. The Bank of Japan's ultra-loose policies has aimed for a sustainable 2% inflation target, and the lack of increase may indicate persistent deflationary pressures and that inflation is not yet fully at cost. For the market impact, Japanese yen may weaken, especially if traders see this as a signal that the BOJ will delay tightening. A stable of slightly dovish tone from the BOJ may keep interest rates low, leading to outflow into high-yielding assets abroad. For the stakeholder relevance, for traders may favor Japanese yen sales strategy against stronger currencies. For investors, continued BOJ dovishness support carry trades and Japanese equities. And lastly, economists indicate inflation plateau may signal BOJ will not shape policy aggressively soon. The next event is CID Industrial Product Price Index. The Industrial Product Price Index measures changes in the selling prices received by Canadian manufacturers. It's a leading indicator of consumer price inflation. For the analysis, IBBI came in as forecast, but slightly lower than the previous month. Success might cause pressure from the supply side, not enough to alarm policymakers or prompt immediate changes. For the market impact, CID reaction likely muted as figures met expectations. Inflationary momentum appears sharp, which might keep the Bank of Canada cautious in hiking rates. For the stakeholder relevance, first of all, traders neutral to slightly bearish CID response. Intraday moves might depend on order releases or sentiment. For investors, no strong inflation sign, likely stability in BOC policy short term. And lastly, for economists, continue to monitor for future inflationary signals. And the next event, Scarlett, can you help me with this?
Well, the next will be the CAD RMPI, which is the Raw Materials Price Index. Well, the RMPI tracks changes in prices of raw materials purchased by manufacturers. It's a precursor to PPI and CPI changes, and its analysis is a fluctuating implies no upward pressure from raw input costs, could indicate easing inflation risk or even deflationary risk in this trade continues with the market impact. CAD may weaken slightly, but the impact will be limited with that surprise. And commodity-sensitive currencies like CAD respond more sharply when large deviations from expectation occur. And for the stakeholder relevance, for traders may reduce CAD bullish bias. For investor, input prices stable, which is lower cost for corporations. And for economists, reinforces a moderate inflationary outlook. The next news will be about USD FOMC member speeches. Jefferson at 8 p.m. and Harker at 8:30 p.m. Well, the comments from FOMC members can hint that they add interest rate direction, inflation concerns, and economic risk. Well, analysis is if either member signal concern over inflation or discusses support for future rate hikes, USD may strengthen. If dovish tone is present, while focus on slowing growth rate cuts, USD could weaken and equities may rally. For the market impacts, speeches are highly market sensitive depending on tone. Risk assets and interest rate sensitive instruments like gold and bonds will be watching closely. And for the stakeholder relevance, for traders, look for keywords, which is inflation resistant, post data dependent, or escaping or swing position. For investor, real allocations decisions may be influenced by tone. And for economists, adjust forecast based on fast set and guidance. Next up, we have the Euro and ECB President Lagarde speak. Well, Lagarde speeches carry significant weight in signaling ECB's stance on rates, inflation, and financial stability. Well, its analysis, if Lagarde indicates that inflation will still too high, markets may price in more tightening, cause the euro to rise. If she expresses concern of growth and financial fragility, the euro could weaken. So with the market impact, expect volatility in euro pair, for example, euro USD, euro GBP. Stock markets could also respond if policy implications arise. So for stakeholder relevance, about the trader, strong opportunity for euro trades post-pitch. For investor, adjust EU euro exposure depending on tone, and for economics, this step we mark on to infer CP path. It's about the euro consumer confidence. Well, consumer confidence reflects optimism or pessimism in the economy. Negative numbers indicate pessimism. Well, about its analysis, which is no change in stagnation, and ongoing consumer pessimism can weigh on economic activity, and consumer spending drive GDP. About the market impact, which is minimal as no surprise, may reinforce period views if combined with weak retail or labor data. And for the stakeholder relevance, that the traders likely ignore this unless other sentiment data align. For the investor with confidence may deter consumer sector investing. And for economists, long-term outlook may need downward revision to trend if trend persists. And next up we have USD Richmond Manufacturing Index. This is a regional measure of manufacturing health in the fifth Federal Reserve listing. While its analysis is reading below zero equal to contraction, and the worsening figure from -4 to -6 suggests ongoing weakness in manufacturing. About the market impact, slightly bearish for USD, especially if this confirmed as a broader slowdown. Risk of sentiment could rise if other indicators also disappoint. And for stakeholder relevance, for traders might support USD short if pairs with dovish face tone. For investor, manufacturing sector exposure could underperform. And for economists, confirm regional industrial softness. And the last news would be on IMF meeting day 2. The International Monetary Fund's meeting gathered global central bankers, finance minister, and economists. While topics often include debt sustainability, global inflation, and financial risk. If major statements or warning are issued, for example about the U.S. debt ceiling, emerging market risk, markets can move sharply. About the market impact is indirect but headline driven, and it also can increase volatility in currency, bond, and equity markets. And for stakeholder relevance, for trader, watch for breaking news headlines. For investor, global positioning may shift due to big picture insights, and for economists, valuable data and statements fed into macroeconomic models and forecasts. That's the news.
Thank you, Scholar, and Brad, for such a fantastic breakdown of today's economic calendar. And thank you all to the audience for joining us today. And we hope the session has been informative and that as you are as excited about the opportunities here at WeMasterTrade as we are. So remember to like, subscribe, and share the live stream with others who might benefit from it. And don't forget to follow us on our social media platforms for more updates, promotions, and trading tips. Stay tuned for our upcoming events, and we look forward to seeing you again soon. Until next time, happy trading.
Copy Trade.